Okay, so let's talk about what we're going to go through here. So we'll talk about the benefits. We'll do a quick walkthrough of what it looks like in the event that you're not already using it. Talk about some of the other considerations in using it in some of the other modules. And then we'll look at the reporting function and some of the considerations there about how to use the reporting. Okay, so why would you want to use tax tracking as opposed to just journalizing tax manually or allocating tax manually? So some of the reasons are that it's much faster. So it speeds up data entry because the tax allocation and distribution is done for you. So no need to manually allocate taxes to a GL account. And in doing that, there's some control in there, and that it's going to balance the entry for you and potentially reduce some errors. It's also very flexible. It can handle all sorts of different scenarios, entry of pre-tax or tax included amounts, partial recoveries. So if you're a nonprofit and you are subject to qualifying PSB rebates, it can support that. It can support expensing taxes separately, holdback scenarios, and various global tax scenarios as well. So it is designed for use on a global scale. So whether it's value-added tax in the UK, US taxes, or some of the special scenarios that you see in Asian countries as well. The final reason is that using tax tracking, you get better reporting than you would get just by using your general ledger transaction listing. And so we'll demonstrate that as well, what you get with the improved reporting. Basically all the information that you need for proper tax tracking audit trail and to file your returns. Okay, so let's have a look at what it looks like in Sage. So the tax services module is part of what's called common services, which means it is a sort of mini module that can be accessed by all of the other modules. It is configured as part of these 4 icons. And again, the idea here is that it is universally configurable for pretty much any tax scenario anywhere in the globe. So to give you a sense of the configurability, again, support for holdbacks if that's a requirement for you. Sorry, I'm just going to redraw this screen here. Support for partial recoverability, recoverable taxes with either full or partial recoverability, separate expensing, automatically capturing the non-recoverable portion and allocating that to your expense distribution. Support for multiple classifications. In Canada, it's pretty simple. It's generally taxable or not, but in other jurisdictions, you can have, such as UK value-added tax, you can have multiple classifications that track different rates. So support for that. And support for combining various taxes, tax authorities are what they're referred to, into a single tax grouping. So British Columbia, as an example, which has a combination of GST and the BC provincial sales tax. So all very highly configurable to accommodate pretty much any scenario. So let's have a look at the most common usage, which would be in doing accounts payable distributions, just to give you a sense of how it facilitates data entry and data capture. So let's look at an Ontario scenario with a 13% HST. So I'll select my vendor. So the screen is really designed to work with the document that you'd have in front of you. So let's assume a $100 invoice with 13% HST, and then a grand total on the bottom of the invoice of $113. So 113 is my document total, including the taxes. And again, it's designed to make it easy for you to do the entry. So typically you're going to see pre-tax amounts on a line item. So I would enter that pre-tax amount, and I'm done. And the system has balanced that entry for me. So it has automatically calculated the tax amount. It is automatically distributing that to my recoverable account, because in this case, HST has been defined as 100% recoverable. And if I need to see a full breakdown, again, I'm just going to force this to redraw here. Then I can see that breakdown on the totals tab. Okay, so $100 plus $13 of tax equals 113. And of that $13, 100% or the full $13 is recoverable. Okay. But on a day-to-day basis, typically all you're going to do is just make sure you balance to zero, and the system is going to, again, do that tax calculation and distribution behind the scenes automatically for you. So no need to put in a separate line, no need to pick the correct GL account. All of that is done invisibly behind the scenes. So let's look at another scenario. So a combination tax scenario where one of the taxes is not recoverable. In this case, the BC provincial sales tax is not recoverable. So let's do the same scenario. So in this case, it's 5% GST and 7% provincial sales tax. So let's assume our $100 expense plus our taxes for a total of $112. And in this case, this vendor defaults to distributing to a few different GL accounts. And so let's do a mixed distribution here. So let's say $50 and $30 and $20. Okay. And so again, you'll see that the screen has automatically balanced my transaction for me. So it's calculated the taxes. So my $7 of GST and my $5 of PST. Okay. And because it knows that the $5 BC provincial sales tax is not recoverable, it's automatically allocated that to the various expenses that I've distributed to on this invoice. And so you can see that here, that the allocated tax gets proportionally allocated to these three lines. And so that my GL distribution includes the tax that I am not able to recover. Okay. So all done automatically, no calculators, no no pre-processing the invoice before you start entering in the sage. All done automatically on screen. And let's look at another scenario. So typically when we review this for folks who haven't been using it, the typical objections are, well, what about the exceptions to the rule, et cetera? And so it's very flexible to accommodate a number of different scenarios. So again, if here's a typical question, right? Let's say there's a rounding error, right? Or a rounding difference in terms of the way your vendor has calculated tax versus how you have. So let's say they have $100 plus $13.01 of HST. So in this case, if I do my same data entry that I did last time, I'm at a balance by a penny because our system has calculated the tax at $13, whereas theirs is calculated at $13.01. Okay, so in that case, that is the exception of the rule. That will happen very rarely, but if it does, you can certainly accommodate that, and you have the ability to override, okay, and specify that you want to enter the tax, and you can simply override compared to what's actually on the vendor's invoice and enter that amount in. Okay. And because, like we saw in that previous example, the total tax gets allocated back to the detail lines, even in the case where it's not, where it's fully recoverable, as it is in this case, it's still doing that balancing of the tax total back to the individual detail lines. It's still tracking it at that level, which I can see here, right? So that line has $13 of recoverable tax on it. So if I override, I simply have to tell it just to distribute that back to the detail lines, and that will balance my entry. Okay, so now at the detail level, I will have my $13.01 of tax. And if that was, again, a distribution across multiple expenses, that allocation would happen across all of those expense lines. So that's a rounding scenario. Another question that will often come up is a partial tax scenario. What if I get invoices where some of the stuff is taxable and some is not? If it's a single line, you can certainly handle it the same way we did on this previous example, just by overriding the tax. You can certainly do it that way. But if you have a multi-line distribution, and let's do our BC tax scenario so you can see that. So let's assume, again, $100 invoice, but only half of it is taxable. So it would be $100 and tax on the half of the 50 would be $6. So the total would be 106. Okay. And so let's say that this first line is not taxable and the other two are. Okay. So what happens in this case is the system assumes that all three lines are taxable, and so I'm at a balance by $6, and I simply have to tell it that one of the lines is not. Okay. And so I can drill into that line and specify that the classification of that line is non-taxable. Okay. So I can just simply change the tax classification of that line. And once I do that, then my entry automatically balances. I now have no tax allocated to that line. And if I see here in my grid, I'll see that the first line got allocated no tax, whereas the other two lines were allocated tax. The other scenario, question that gets frequently asked, what happens if I have documentation like, expense report type slips and things where it's not real clear what the pre-tax amounts are? So the system will let you work with tax included amounts and sort of work backwards instead. So if we take that same $100 plus HST scenario, $113, okay? But this time, and this is is a very simple example, of course, but you can imagine a more complicated one with multiple lines where I don't know that pre-tax amount is $100. It's just not readily available, or I have to do lots of digging or lots of math. What I can do, and I can default this at a vendor level, is to specify that I want to deal with tax included amounts, okay, and have the system basically work backwards. Okay, and you can, I'm overriding it here, but I can make that the default for a particular vendor. Okay. And so what I can do is just simply enter the 113 after tax amount, okay, and the system should back at the taxes. I'm getting a calculation difference here, so obviously I've configured something. Apologize for that. I'm not sure why my config is not respecting that. What I should see here, without having everyone watch me troubleshoot this, what I should see here is the tax get backed out. So the distribution net of tax would be the $100, and the GL distribution would be $100. Okay, so, and it can accommodate that in, again, all the different scenarios. So if that was my BC scenario, you could back the tax out and then add the non-recoverable tax back on. Okay, so that's why you see these columns. So it's completely transparent. Apologies for that. Okay, so let's look at just some rules of the road if you're going to be using this functionality. Ideally, you want to go all in on that, and which means that you want the system to always do the proper tax tracking for you. You don't want to get into a case where you're manually allocating taxes to directly to a GL account. And that simply means that whatever module you're in, you want to look for the tax code and not really look at the general ledger account. Okay? So the idea is within the configuration, and we will have removed, some of the complexity from the users who are going to be doing this, so they don't need to understand where the debits and credits go in the GL. They just need to make sure that the entry is balanced. Okay, so in this setup, again, it knows that if I collect tax, then that goes to my GL account 2430, and if I'm paying tax, it's 100% recoverable, and that's going to my GL account 2435. And so the idea here is on a day-to-day basis, once I've done this configuration, I always want to be referring to the tax by its tax code, either by the tax group code or within the breakdown of that group, the individual tax authorities. Okay, so by those codes and not by the GL accounts. Okay, I'll let the system worry about the GL distribution. And the reason I want to do that is that I will have the benefit of a separate tax tracking report if I let the system manage the taxes as opposed to me just putting debits and credits to GL accounts. Okay. So avoid using the GL accounts directly and always use the tax codes. Okay. And so what that means is that in really any of the subledger modules in Sage, will be tax aware. And so whether it's accounts payable or purchase orders or order entry, you'll see all those tax tabs, you'll see the tax codes, et cetera. And that's an indication that the system is managing those taxes for you. Okay. Likewise, if you're doing some of the somewhat more recent changes where they've been able to further through a system, if you're doing bank entries, you'll see support there as well. Okay. So if I'm doing a bank entry, again, instead of doing an entry to a GL account for $100 and then manually adding my GST account for the additional $13, I can properly do it as a proper tax tracking entry so it hits my tax tracking report, which we'll demonstrate for you here in a couple minutes. And so all I have to do is indicate that this is an entry that has tax with it. Okay, and then I can pop up my tax pop-up screen, specify that HST applies, and again, you'll see that it's done all the calculation and all the distribution is happening automatically. Okay, so I get now $113 entry, which is $100 plus the HST being calculated automatically and distributed behind the scenes. So the one remaining area where tax tracking was not supported up until recently was directly within the general ledger. And so if you were making journal entries and you wanted to capture taxes, you could certainly do that, but there was no way to have those taxes flow through to the tax tracking until recently. And so you'll know if you have that capability in your version if you see this entry type pull down. And that's an indication that your journal entry screen is tax aware or tax enabled. Okay. And so in order to do a proper tax tracking entry in the general ledger directly, you'd simply need to specify that you're making a an entry that includes tax, and then specify what kind of tax you're doing, either sales tax collected or purchase tax paid. So in this case, I'll do a purchases type entry, and I'll specify that I'm capturing HST. Okay. And so once I've done that, this button will light up that says create tax details. And what that will do is it will create a journal entry line for you that is pointing to the correct account, but more importantly is also associated with the tax code. And that means that it has enough information to properly log this to the tax report, to the tax tracking. Okay. So in this case, HST is recoverable, so it's defaulted to recoverable. But if you have, allocated or non-recoverable, as in the case of the BC PST that we looked at earlier, you can capture those amounts as well. So that's what that second column is for. So it'll automatically create that line for you. I can capture my $13 of tax paid there, and then I can create non-tax lines to balance my entry. So I can create a regular, GL expense. for my $100 of expense. And then let's say this is, intercompany. So I'll book my $113 there. Okay, so now I have a balanced journal entry where the entry again is associated with the tax codes, and I've specifically captured the one line as a tax detail line. Okay. Go back and post my accounts payable transactions. Okay, so let's talk about what this all translates to and a couple of things to watch out for, just with our last few minutes here. So again, the benefits here are that you're going to get a proper tax tracking report, which will allow you to see the full details. And so you can run this from either side, right? From the purchases, the taxes paid, and also the sales, the taxes collected. Okay? And you can run it for whatever range of dates or fiscal periods, depending on your remittance cycle. And what you get is a report that captures all of the information, okay? Regardless of what you sent to the general ledger. So you're getting vendor numbers, you're getting invoice numbers, you're getting the full amount of the invoice, the amount that the pre-tax amount, the amount of the tax, and how much is recoverable. Okay, so you're getting a full audit trail. So things to keep in mind here, and this is something that has changed. This report used to be designed as a report that you would print and purge immediately with an open-ended beginning date. The idea being that if you backdated something after a remittance cycle had already happened, that backdate transaction will get picked up on the next, automatically get picked up on the next run of this. Because you had purged, the detail from the prior report. The report is no longer structured that way, and so it just means you need to be a little more judicious in terms of your fiscal calendar locking. So you'll certainly want to, once an accounting cycle is done, lock the fiscal calendar for that period, so that you prevent any backdating of transactions, and you force users to, record those transactions into the next period or the next cycle, so that they're going to get picked up properly in the report. And of course, the fail-safe is always to reconcile or compare the output of this tax tracking report with what are in your GL control accounts to make sure that you're picking up everything on the tax tracking that is in the general ledger, and that'll be your reconciliation to make sure you've got everything accounted for. Okay, so that takes us to about 5 minutes left. Maybe I'll see if there are any questions, and we can cover any questions that folks might have.
So we currently don't have any questions at the moment.
Okay. If there are no questions, then I'll show one other item, which is related to inventory. So if you are tracking inventory, selling inventory, purchasing inventory, a couple of quick points there that sometimes lead to confusion. When you're setting up pricing for your inventory items, you'll see that there is a tax tab on the pricing. Generally, you're going to leave that blank. So that is not talking about the taxability of the selling price. It's referring to whether taxes are included in your selling price. Okay, so the tax calculation mechanism will work even if you don't specify taxes here. Okay, and generally you do not want to specify taxes here because that will result in tax included pricing presentation in your transactions. And that's generally going to be problematic because that is not not allowed in Canada. The other concept is when you're setting up the individual items. Generally, if you set up your taxes with the classifications, where the most common classification, taxable is tax class 1, then you generally don't need to list taxes here either, because the system will assume tax class 1, and if that's the most common scenario, then it will again automatically do the tax calculation for you, assuming tax classification 1. So you generally only need to specify taxes here if it's an exception to the rule. So if there are some things that you either buy or sell that are non-taxable, then you would list those here with the appropriate non-taxable tax classification. Otherwise, you can just simply leave this blank.